So all the constituent parts of the hotel industry, companies such as mine, which is a one-stop shop for investors, essentially operates and supports the client across all these different areas. And that makes a huge difference, not just from a professional perspective, but from an academic perspective, as to what you need to do to navigate a situation from where it is to where it's going to be. And honestly, the situations that we've had in the good times, we are busy. In the bad times, we're even busier.
What I do is inconsequential. Why I do what I do is I get to shorten people's journeys every day. What I love about our hospitality industry is that it's our mission to make people feel cared for while on their journeys. Together, we'll explore what hospitality means in the built environment, in business, and in our daily lives. I'm Dan Ryan, and this is Defining Hospitality. This podcast is sponsored by Berman Falk Hospitality Group, a design-driven furniture manufacturer who specializes in custom case goods and seating for hotel guest rooms. Today's guest is among the most accomplished executives in British hospitality and an experienced hotelier with 35 years of experience. He was honored with the appointment of Order of the British Empire in 2008 for his services to tourism and hospitality. He's the three-time chairman of the Hotel Marketing Association, Visit England, and the Hilton in Community Foundation. He's the CEO at Michels Taylor. Ladies and gentlemen, welcome Hugh Taylor. Welcome, Hugh.
Thank you. Thank you for having me.
So I think, actually, I don't think, I absolutely 100% am confident you are the first OBE that I've had on the show. So please, for all of our listeners everywhere else in the world, please share with us what that means and how you got that. And then I'll ask you what hospitality means to you.
Well, that's kind of you to bring it up. Yes, I got it very cheaply, I should tell you, Dan. The OBE and the honours system in the UK is given to people who have given services to their industry, but more importantly, have done 40 years of charity work or won an Olympic gold medal or something along those lines. I happen to have a non-exec role in government, running a tourist board whilst I was at Hilton, where I ran a division of the business, for which at the end they give you a gong, a medal, which is very nice. And it's completely off track, but it was a fabulous day. We went to Buckingham Palace, my wife and I, with two of my four children, and they sat in the throne room, which is where you have the ceremony, and you all wait on the side. And then I went in, and King Charles, who was Prince of Wales at the time, gave me the gong. And you stand in front of him, you bow, you go up, you get the medal on the lapel, and they talks to you for a couple of minutes. You bow again, step back, and leave the room. And he said to me, and this is absolutely true. He said, "Hugh," and I thought, "How do you know my name?" He said, "Hugh, didn't we meet at the Tower of London 2 years ago?" And I said, I thought, "How on earth do you know that?" And I said, "Yes, sir, you did, and it's very kind of you to remember." And then we talked a bit about tourism and we carried on, and then I left. I went back and sat down and I thought, how does he do that? And I was looking as the other recipients were going in. And it was very clear that what happened was that there was a guy in full regalia, in a yeoman of the guard, the uniform that the Tower of London people wear, standing behind him. And before everyone turned up, he would go up to the ear and go, "Didn't we?" etc. So he would literally tell him before everyone came up. And I thought that was so clever. And it's only afterwards that you actually think what you should have said. Hindsight's a great thing.
Oh, I love that. But yeah, the Monday morning quarterback.
Exactly. So I thought, when he said to me, "Didn't we meet at the Tower of London 2 years ago?" What I should have said was, "So I meet so many people. And I don't know, were you there?" But I thought if I did that, he'd probably send me to the tower or take my medal away from me. So I didn't say anything. But it was a lovely day.
Straight to the rack for you. So, but hearing that story, that is one. In speaking to hundreds of people about hospitality and what it means to them, look, you're talking to royalty. His Royal Highness is there, the Prince, now King. His delivery to you felt special to you. you felt seen, heard, known. And that comes up so much in all of these conversations. But meanwhile, so oftentimes there's technology, there's a screen, there's someone else with a folio letting you know. In this case, it was a yeoman that was whispering in his ear. But in a way, for me anyway, it doesn't matter what that is. It was a magical experience for you, no matter how it happened. Correct? So kind of with that in mind, and your very distinguished career in hospitality, like, how do you define it? Or what does hospitality mean to you?
So it's a really interesting parallel. I hadn't thought about it before, really. But when you talk to a member of the royal family, you're the only one in the room. They're trained that way, but they talk to you in a way, unlike politicians, perhaps, who are glancing all over the place. They literally just look at you and you are talking to them and you feel incredibly special. And that's what you're absolutely right, it's about. And that's true hospitality. Listen, I'm a marketeer. I spent the first 17 years of my career in marketing, ended up as vice president of marketing for Hilton before I went over to the operational side and then the investment side. And so I will answer your question from a marketing perspective.
Perfect.
It seems to me that hospitality is about understanding customers' needs, which is effectively the definition of marketing, and making sure that you satisfy those needs every step of the way. And that makes them feel special, wanted, understood, and will come back and repeat their purchase again. Hospitality is not just about looking after people, it's about recognizing what they need and making sure that the service you provide is relevant to them, is worth the investment that they're putting into a hotel room or a restaurant, a bar, or any other tourism facility that comes under the banner, and making sure that they are looked after and satisfied. It's the satisfaction of needs that's important.
Yes, I couldn't agree more. And given that you worked at Hilton and as a marketeer, to use your word, um, you've since moved on and you with a partner founded your company. And what I found so interesting about your company is, and I don't want you tell the story better than me, but you started off doing one thing, and then you've grown into four different channels of business, like almost like a flywheel within hospitality. And you get to see things from a management perspective, an advisory perspective, an investment arm, and you can say it much better than I, but I'm actually fascinated at this flywheel that you have created. And I was wondering if you could just walk our listeners through kind of how you guys are set up and how your definition of hospitality has perhaps driven you to where you are now and your ascendant path.
So I've been blessed in my career. Genuinely, I'm an incredibly lucky guy because I've seen the industry from three angles, and that's very unusual. I started in marketing, so I ran marketing teams in four hotel companies across Europe. And you get a perspective of the business from a marketing perspective. I then moved over to operations and I ran hotels and the people within them, and we delivered to our customers. And interestingly, I learned the industry from that, not from the marketing. The marketing made money for the businesses, and I learned how to make money for businesses. What I didn't understand was what the realities of a product of a profit and loss accounts are, how a P&L really works, and how to optimize profits from it. And that you only get if you actually run the hotel. It's a bit like a retailer going back to the shop and working behind the counter. That's exactly what I did. I had 5,000 people in the team. I had 31 hotels, all branded Hilton, and it was a big business that I was able to navigate and move forward in. And I learned my trade in that role. And then the third angle, which was even more fortuitous, was to go over to the investment side of the business. And of course, when you're in the brands and in the hotel companies, you're not really exposed to the board level discussions around shareholders and finance and debt and equity and all the other things that investors are thinking about. You're just running the businesses. So I learned how an investor sees the hotel, which is entirely different to how an operator does, and certainly different to how a marketeer does. So I've had this absolutely privileged career over the 30 odd years that I've been in it, where half of it was in marketing, a third was in operations, and then the rest has been in investment. And the business that we've created does reflect that. We wanted to be a one-stop shop for investors. So all our clients are investors. They own hotels. They're either investors, financial institutions, or private equity firms, hedge funds, anybody who has an interest and an appetite for hotels and hospitality. And we look after them as a client base, and we do it in four ways. We have an asset management business, and an asset management business oversees managers on the ground. So there is a hotel management agreement with Hilton. We, on behalf of the owner, oversee Hilton to make sure they do a good job. And we have about just under 2,000 bedrooms under asset management.
And then just for the under 2,000 bedrooms, just to give a scale of like how many hotels approximately is that?
So that's about 10, 11 hotels. And we have we have hotels like the St Pancras Hotel in London, which is a very famous one. We have the Chiltern Firehouse, which is Andre Balash hotel in London.
Oh, I love that place. They have a great bar there.
They did. Unfortunately, it burnt down.
Oh, it burned down, didn't it? Oh,
Yeah.
I went there before it burned down. I love that place. That was so fun.
It wouldn't have been as fun after it burnt down, so you went at the right time.
Well, it's also ironic. It was a firehouse. I'm sure that you've heard that a million times.
Well, you do know that the guys that came to put the fire out, a couple of them had actually been based in the firehouse when it was a firehouse. And they came out. So it was a really extraordinary experience. Andre is an amazing guy. I love him very much. And he really, we talk about hospitality. He gets hospitality in a way that I've rarely seen in others. But we oversee Andre's team on behalf of the investors of the Chiltern Firehouse. And as you know, they have the Chateau Marmont in LA, and they have the Mercer in New York, and so on. And we oversee them on behalf of the owners and make sure that we can add value and get the business to do as much as it can. So that's the asset management side. Then we have an advisory business that does feasibility studies, independent business reviews, strategic analysis, a lot of brand selection work. That means some investor comes to us and says, I want to put a brand on the door. We'll negotiate franchise deals, hotel management agreements, leases, and so on with brands. So we work with all the development teams across the industry. And we also take brands off doors if they're value destroying. It's a legacy deal that the hotel doesn't really need anymore or has never really made money out of, because brands aren't the solution for everyone. Sometimes they're just too costly against what they can deliver. So we then negotiate to as best we can. Because of my partner David, and my background, we can go up the ladder of the businesses. So we don't just talk to the teams on the ground. We can go to European level, even global level where needed, on behalf of the investors that we have.
And then I'm sorry to interrupt, but just so I can interrupt there. So the asset management with those 17 or I don't know, 2,000, under 2,000 rooms, about 11 hotels, and that's ongoing continual business. And then the advisory business, that's really project based, and it could be a couple of years, a year, but you're basically doing feasibility analysis, due diligence before an acquisition, looking at repositioning.
There's a beginning, a middle, and an end of a project. We are hired to do a specific project, which we deliver, and then we leave. So at the moment, for example, what are we doing? There is a college in Oxford that, would you believe, which is looking to redevelop a whole wing of their accommodation, and they want to become a convention center outside term time, because it's just one of the Oxford colleges. So we've been asked to come in, develop a business plan, look at the facility and the product, make sure the product is optimized, that it looks after their term business, but equally is appealing for their outer term clients that may be able to come, and put a business plan together to show them how much money they can make from it. We have another project in Spain at the moment, where there is a big development of what is going to be a St. Regis in Marbella, in the last great plot on the beachfront in Marbella. It's a very large project. We've been working with the owner for some time. We negotiated the deal with Marriott to put St. Regis on the door. We put the business plan together. We defined the products and so on and so forth. And then we have feasibility studies, such as the one we did in Montenegro recently, where somebody decided that they wanted to put a hotel halfway up a mountain in Montenegro, in the most fantastic spot. And we wrote a 70-page report which said, you should build this at this level of quality, this sort of facility, this number of rooms configuration, business plan, commercial strategy, distribution, pricing, all the things that you're looking for to make the hotel successful. You should think about these brands to go on the door of it, and this would be what you'd build. And that is a project in its own right. And we get fees for these individual ones. And then the last part of the business is the management business, where we actually run hotels for people on the ground. And we have about 3,000 bedrooms under management, 22 hotels, mainly branded under franchise. So we're the white label manager that runs the franchise. This is a model very common in America, and is now proliferated across the European continent. But in fact, when I was in Hilton, interestingly, and I left in 2007, we had no franchises in Europe. The Blackstone deal had only just happened. So it was just starting. And now, of course, like all the other hotel companies, these are major franchise operations and brand companies. In my day, Hilton was an owner operator. It owned all the assets and it operated them all for itself, which of course today is not the model.
Yeah, because I feel everything, all capital has kind of gotten so specialized in whatever structure that they're in, and they drive their own values. You said that you started in 2007. So you worked for Hilton, a big corporate entity, like a safe job. Well, nothing is ever really safe, especially hospitality is very volatile. But taking that entrepreneurial step, did you have the vision when you took that step just before the financial crisis? By the way, I'm sure you know all too acutely, but did you have a vision of having these 3 or 4 different arms creating that flywheel of the business? Or did you say, you know what, I know we can do this one thing better. Let's do this one thing first. And then it kind of grew. I'm just very curious because it seems like such a cool self-feeding model that you're able to generate cash flow, but also be opportunistic and look for new deals and help connect the dots to potentially create more deals that could go into your asset management or management business. It just seems like it evolved. I think it evolved, but was that your intention from the beginning, or was that just the natural progression?
That's a great question. No, we had no idea.
Okay, good. Because it sounds so perfect.
I'm being very honest. I'm being very honest here. So here's what happened. I'll tell you what happened. David Michels is a more interesting story than me because it was a bit like going into business with God. David is one of the most famous global hoteliers in the world. He ran businesses like Stackis, which was a Scottish hotel business that he turned around and sold to the Hilton business for £1 billion when it was pretty much on its knees when he came in. He was at Grand Metropolitan in the 70s and 80s, which was one of the largest global hotel businesses of all time. They then bought into Continental in the 80s, and it became Diageo in the end, which is a major drinks company, but that was a hotel company before it was a drinks company. He's been involved as director of the Savoy. He was on the board of Jumeirah in the Middle East. He was on the board of Strategic Hotels with Lawrence Geller for many years in the States, based out of Chicago. So he was really, and is to this day, an extraordinary hotelier. And it was actually David who was approached by 2 investors, a guy called Igala Houvi, who's an Israeli investor, and a guy called Derek Quinlan, who was based out of Ireland. and the two of them had bought 42 Marriotts. And Igal, through a separate investment community, had bought 16 Hiltons. Now, I was in Hilton at the time, and I was running 10 of those out of the 16 within the division that I had. And they went to David in 2007, just about 2 years after David had sold Hilton to the Americans, because David was the chief executive of the whole company outside America. So he ran the whole of the Hilton business and then sold it for £4.5 billion, so whatever that is in dollars, to the Americans. And he wasn't in the business anymore, per se, as an operator. And they came to him and said, "Will you run this business for us? Because we just spent £1.5 billion, and we don't not sure what to do with it." David said, "No, I don't do that anymore, but I know a bloke who will." And he came to me and said, "Do you want to be an asset manager?" Now, you made a point earlier on, which is absolutely spot on, that if you're in a business, you're entirely in control of it. There's a safety net, there's a structure, there's distribution, they pay your salary, you've got thousands of people who are doing the job with you. There is a real collective that you don't have if you're an entrepreneur. And that's really safe. I have 4 kids, a wife, and a mortgage at the time, and I really needed to make sure that I was okay. So that job was amazing. It was the most fantastic position. Also, doesn't do too much damage for your ego, because you're seen as one of the senior guys. So it was really fun. And to come out of that and take on this entrepreneurial business, which has been a couple of investors. Anyway, David persuaded me to. I said no twice, and he kept coming back to me and said, "You should do this." So I went out and I said, "I'll only do it if you're on the board with me." So he said, "All right, I'll come on the board, but I'm not doing any more than that." And he started there, and I started running the business. And this is how good we are. In 3 months, the whole thing collapsed.
Was that because of the financial crisis or just?
Yeah, what am I going to say? It's because of me.
Yeah. It was before Brexit. What was it?
It was before Brexit. That's right. So the world collapsed around us. We had 22 banks turn up on our door in early 2008. The first 6 months of that new relationship that we had with the lenders was spent with the lenders trying to work out how to talk to each other, let alone us, because they'd syndicated the debt, but no one had thought about how we might all work together should the whole thing fall down, and no one thought it would.
And just curious, this is an adage I hear all the time, but just curious, how much was the debt at that point?
95% gearing, I think it was at the time.
And what was the pound value? Or
it's one point something billion.
yeah. So what's that thing where it says if you owe the bank $1 million, you have a problem. If you owe the bank $1 billion, the banks have a problem. So this is why you're negotiating with them. They're not just.
Yes, I think that's right. That's 100% right. But of course, remember that at that time, we were just one of the billions that they had the problem with. I mean, the whole world was falling apart. So the deals today would never be those deals, and they're not. You can't get over 65% gearing today. In those days, there were 100%. 90, 95%. As you get a cold, and you go below your covenants, and you get into trouble. And literally the world collapsed around it. I had to work with Marriott to take massive costs out of the business very quickly on the portfolio, and so on and so forth. Anyway, that took 5 years to develop. So halfway through to get it out, and we sold the Hiltons to Oak Tree Capital, and we sold the Marriotts to ADIA, the Abu Dhabi Investment Authority. And they then did very well with both of them. In that time, it seemed very clear to me that I was doing myself out of a job, because I was selling the only businesses that we had. We had 2 portfolios, so that wasn't going to be very good. And so I spoke to David and I said, "Look, we got to take this thing over. Let's keep the management business. Once these assets are sold, we will work for other people as well." And we'd been asked by the banks who came in, who we hadn't met before, and wouldn't have met had the business not been in crisis, whether we could help them with their assets, which of course we couldn't.
That's one thing I wanted to say. So as a self-proclaimed marketeer, now you're getting a crash course in finance, right? So maybe you could have been doing yourself out of a job of hotel management, but I think you were quickly learning how cash and money and the relationship of capital and allocating of capital and how it flows.
Well, thank God my partner was Sir David Michels, because of course he understood it totally. So on the first day when we realized that the company was in distress, and we got the call from RBS, the Royal Bank of Scotland, who was the main lender on it all, and said, this business is in default and you're now talking to us. I phoned David and said, where am I, I'm gonna have to get another job. This is it. The business has fallen over. And he said quite correctly, this is just the start. There is going to be a process. We brought Rothschilds in to help with the refinancing. Had these advisors, this advice, this thing. And honestly, it took 5 years to play out. So we had plenty of time to understand and work it through. I had no comprehension as to this process. You're quite right. I didn't understand it at all. And I'll tell you one story. I don't know how flowery my language can be on this podcast, so I need to.
Oh, you can. It's all anything goes.
Are you sure? Because it's a bit rude. Okay. So we were asked very early on to put a business plan together for the portfolio. This was in 2008. And I turned up pretty, I'm a hotelier and I'd run hotels and done marketing, but I didn't understand finance to the degree that I now do. And David and I went into a meeting at Rothschild's offices to talk about the business plan that we'd put together, which Rothschilds had understood. And we went into an ante room, a room on the side, and the guy from Rothschild said, Hugh, will you take the first 20 slides? And I hadn't thought about presenting at all. So that was just as we were going in. I'm a marketeer, so I'm a great bullshitter. So I was able to go in and do my thing. And I said, David, I'll talk to you say a few things afterwards. So I went in, and The Simpsons, Mr. Burns, where he has this dining room with a table about a mile long, and one guy sits on one side and one on the other. So it had that sort of table in this oak room with about 50 people around the table, and then a whole load of people around the outside of the room making notes, lawyers and finance people and accountants and representatives and so on. So I stood up, did my thing, and got through the slides and explained to them what my business plan was. And then I said to David, would you like to say anything? And he said, absolutely. So he stood up, and as only David can, he said, ladies and gentlemen, you're all fucked. And that was his opening remark.
And just so because I have to imagine at that point, even if they're all fucked, they're not, they would happily take the keys back. But if they took the keys back to all those properties, what are they going to do? They don't know how to run a hotel, and that's how it has to perform, right?
No, it was. Of course, it was genius, because essentially, because he's the ex-CEO of Hilton, he talked to them as he would talk to people who he needed to communicate the situation. He said, what are you going to do? He said, the hotels actually are profitable. They work. We are in a financial crisis. There's no one who's going to buy any of them. We need to deliver the business plan. You're in good hands. But honestly, what options do you have? Just get a grip and do what needs to be done and support this thing. And he sat down again. And they lapped it up. They absolutely loved it because, so David was being honest and direct, which he always is. And that was how we won over the banks. That was genuinely. And they worked with us and trusted us. And it taught me a great lesson in business, which is that you really have to be transparent and you have to be honest. The reason our clients work with us is because we never bullshit. We'll always tell them the truth. It's why we're actually pretty poor advisors on the buy side of the industry, where we're representing people who are trying to buy hotels, because that you're up against people who are being told that the business plan is X, and that's why the value and the price you should pay is Y, and that's where they go in and bid. And our bids are always lower because we're saying, you know what, that's the reality. I don't think you're going to go beyond that. So we don't inflate it. Therefore, our pricing is much more difficult to get to the level that the others are at.
Okay, so and now I know I don't think you mentioned it in this conversation, but I know when we spoke earlier, you had the three different channels, so asset management, advisory, and management, and then now that's also evolved into kind of being an allocator of capital, an investor in hotels as well, correct? And that is that the latest bolt on into your business, and then
It has.
so if you can explain in a perfect world, everything is humming. How you, it sounds to me like you've created, I said this word flywheel again, but now you've created this flywheel in your vertical that sounds really interesting. So explain, like in a perfect world, how does it all come together like a symphony?
So this is the fundamental part of the business and why it's been so fascinating for me personally, because Michels Taylor is absolutely in the middle of it all. If you think about it, where there are different stakeholders in a hotel, we talk to lenders, we talk to brands, we talk to operators, we talk to investors, and we work with all of them. We talk to brokers all the time. We talk to valuers. And so all the constituent parts of the hotel industry, companies such as mine, which is a one-stop shop for investors, essentially operates and supports the client across all these different areas. And that makes a huge difference, not just from a professional perspective, but from an academic perspective, as to what you need to do to navigate a situation from where it is to where it's going to be. And honestly, the situations that we've had, in the good times, we are busy. In the bad times, we're even busier because people are looking for the support that perhaps you don't always look for when you're having a decent time. And in that period of the first 12, 13 years of the company, we were relying on other people's capital. So we went to an investor with a business plan for a hotel or identifying an opportunity, or they came to us and said, we're looking at this, would you be interested in working with us on it? And that's how we did it. It was their money. And what we always wanted to do, which was a logical thing once the platform was built, was to start to control our own capital, have investors around us who work with us, available capital to us is secured, and we are then able to find the deals ourselves and secure deals that we can then earn out of, not just in terms of our management fees and the due diligence and the investment management, not just in the capital and property fees that we will charge for supporting the redevelopment of hotels and the capital investment, but also through hurt money and JVs actually come out at the end of a successful project with a small share of the upside. So we're able to do that now in a way that we've never done before, and that's what you were referring to when you talk about the investment side of the business now in place.
I really appreciate how you said when times are bad, that's actually when you're busiest, because that's really when the deal flow increases. I find, at least in North America and in the US in particular, um, from COVID onward, there's just been a lot of, I don't know if you could call them lifelines or government support, or um, where that capitulation in the down cycle hasn't really happened yet. I keep hearing it's about to happen, but it's like the capital hasn't allowed itself to flush through. Capitalism hasn't really been allowed to work over the past 5 or 6 years because there's been so much money that's been thrown into the system. Are you finding that in the UK as well? And greater EU in general, but where are you seeing us in that in the credit cycle right now as it pertains to hotels?
It's a really good point. Europe is very similar. The businesses are not, and the banks are being far more supportive than they had been historically over the last 30, 40 years. And I think that's partly following the financial crisis where their positions were different. They, as you said earlier, if you have a loan which is 95% of the value of the business at the time that you bought it, and then the business starts to deteriorate, well, the bank is immediately exposed and has to do something. When you're at 50, 60%, it's a very different place. And they know they're okay. They just need to support their clients because they want more business from them. And the regulations and rules that were put in after the financial crisis has certainly benefited the industry in terms of its protection and its sound basis for investment. So the answer is that the industry is in a much better place in terms of the lending, but as a result, there hasn't been as much activity as you would expect when post-COVID the businesses have certainly suffered, and they've suffered not through top line, because, as you know, and I'm sure it's the same in the States and across the world, rates have massively increased. Took the family to Florida last year. I could not believe the prices compared to where it was previously. Having said that, the cost base of the businesses has increased significantly as well. And there was a statistic I saw, which I spoke at a international conference in Prague last week and mentioned this. If you look at the London luxury sector of hotels, and London has a very substantial luxury hotel sector. If you look at the growth in average rate between 2018 and 2025, the average rate has gone up by some 40 to 50%, which is significant. The GOP margin in 2018 for that same group of hotels, so the operating profit margin of these hotels was around 38, 39%. And today, that figure is 28 to 29%. Now, bear in mind that your margin is essentially driven by the rate, because that's your best source of revenue. In occupancy, if that grows, you've got costs related to that. Food and beverage, even more so. Therefore, where you get the purest drop to the bottom line is in the growth in your average rate. And that's been substantial over the last 6 years. And yet, even with that massive growth in rate, the margins in the sector have gone down by up to 10, 12%. That means that you're far busier, taking far more money, and making far less.
I find, and again, what I do is I furnish hotels. So we supply custom case goods and seating to hotels, guest rooms in the 3 to 5 star range, that luxury lifestyle. And what I've seen from 2020 onward is rates have skyrocketed. Hotels are not making as much money, and they've depleted all their CapEx reserves that they would usually use for renovations. There's less housekeeping. The stuff that I would normally provide on a cycle is getting pushed out and not happening because of, I guess, the encroachment on the operating profit of everything, and the banks lowering their covenants on CapEx reserves, et cetera, et cetera. And I just, going back to your vision or the story that you shared of bringing your family to Florida and paying so much, but everything is so beat up when you get there. It's not like you feel like everything is perfect, right? Everything is very kind of threadbare and a bit worn down. And I just don't think the experience is commensurate with what people are paying right now.
Well, that's possible. I would probably kick back on that a little, in that the market does pay it. I don't think we've seen the resistance that perhaps you might have seen had you gone down a different route. In other words, COVID happened. Terrible, terrible, terrible time. We can talk about COVID if you want, but in that period, it was really shit time for everybody. After COVID, rates went up significantly. And it might have been the case that you'd expect the rates to go back down to pre-COVID levels over time, because to your point, there's a resistance in the market, or you just couldn't maintain or sustain it. Actually, that hasn't happened. The rates have stopped growing, or arguably 2-3% still growing, but pretty much stabilized now. But they haven't gone back. So I would argue that the market has been re-educated, understood that this is now what people are paying. My home market of London is still in the low 80s, low mid 80s in occupancy, and so's Paris, so's New York, and I'm still going to Florida with my kids, just paying double the price. So I think you're right in terms of the products keeping going. That's a cyclical thing. The capex investments are a necessity in our industry. You will lose market share if you don't invest. We are a very capital intensive business, as you know. And I think there are periods of time when margins are so tight that they don't have the capital available to reinvest. And we may be in that period at the moment as people readjust their business plans. But I think there's a lot of new products out there. There's a lot of good brands which are insisting on proper hotel standards and products, and the brands are doing pretty well in keeping the levels of quality up.
Well, I think Hilton in particular is they're more heavily, they're all about net unit growth still, but I am hearing that they are more heavily weighting guest feedback in I don't know, in how they analyze each property, and they're trying to incentivize more good guest feedback. I don't know how they're doing that yet. I got to dig into that, but I'm hopeful that the more discerning customer will help the proverbial tail wag the dog as far as getting everything refreshed and looking good. One thing I wanted to bring up because okay, you're based in the UK, but really you do work globally, but really it would be the UK and EU, correct? Predominantly.
Correct. Mm-hmm.
In the United States and even the provinces of Canada, going from state to state or province to province, there are some jurisdictional challenges that you have to get out, whether it's fire code, labor, whatever. I can't imagine what those, but they're like speed bumps, right? Okay, we can manage it, we can understand it, but I can't imagine how difficult that is in the EU from country to country. And I know they're more than speed bumps, but when you have a client that's looking at buying, or you're looking at getting involved in a project outside of the UK, how much do you have to spend an inordinate amount of time understanding the jurisdictions of the country that you're in? Or does the law of the EU kind of smooth out those things? But I can imagine it must, like, just from language and just law and jurisdiction, it must be way more difficult than it is in most of North America.
It is, and even with EU regulations and consistency across various areas, there are very significant variations dependent on where you operate. And some of that's a function of the type of deal you have. So, for example, in Germany, the majority of the hotel stock is leased. It's a lease model that operates in Germany, as opposed to franchise management. And that's changing a little, but it's still very much determined on that. If you go to France, the unions are much stronger than in other parts of Europe. So there is a labor and payroll and workers' rights range of issues you've got to understand, and so on and so forth. Eastern Europe adds an additional complexity because they are developing markets in some locations which have their own challenges. And then in my home market of the UK, which is a very mature market, you are dealing with government policy. So we actually, as we are speaking, the Chancellor of the Exchequer is standing in Parliament giving this year's annual budget speech, which has been a very interesting build up to what she's going to say. And she's raising 30 billion of taxes, I think, as we speak, which is why I'm much happier speaking to you, because I think she's going to come to me for it. But when you look at the government policies that she did in last year's budget in the UK, she increased the national insurance contribution, which is the tax that companies pay for people, to by £2,500 per head, per employee. So for a hotel that makes £1 million and they have 100 people in the building, you've lost a quarter of your profit overnight. Now, you need to understand what the government policy is in every jurisdiction in Europe. It has nothing to do with the EU. That's just a company, and that happens even though we're outside it. There is a policy that the government's going to put in terms of taxation, on regulations around employment, and a whole range of other business things that do vary country to country. And you've got to understand it.
Hey, everybody. We've been doing this podcast for over 3 years now. And one of the themes that consistently comes up is sustainability. And I'm just really proud to announce that our sponsor, Berman Falk Hospitality Group, is the first within our hospitality industry to switch to sustainable and recyclable packaging, eliminating the use of styrofoam. Please check out their impact page in the show notes for more info. So, which is why I think I'm getting a bit over my skis here on the investment arm of your business, but I think it must be an exciting time where you sit as well, because from what I'm reading in the Wall Street Journal and just other business periodicals here in the US, there's over the past, let's say 9 months, and I'm sure it coincides with something that might have happened with an inauguration or something in the US, but there's been a flight of capital out of the US back into Europe, looking for opportunity there, because the US has been on a bit of a tear, but I think just politically, and it's very much overvalued in my opinion by what I'm reading, just from how the rating PEs. But you must be seeing a lot of capital and allocators of capital from North America, or people who would typically invest in North America, kind of move their attention over to you in the EU and UK. How are you on your investment arm? Are you seeing an uptick in capital coming over looking for deals? And if, let's just pretend there was someone in the US or Canada that was looking to invest in the UK or the EU in real estate or hotels in particular, how should they be approaching the market? Like, what's your perception of how the EU is doing these days as a place to invest?
So the answer to your first point is there is no shortage of capital. There's lots of money out there. And of course, the funds in particular, the PE firms and the funds out there are there to find ways to place their money. Holding on to it is not what they do. So they need to find deals to place into the market. So everyone is eager to invest. The banks are eager to lend. I think the high street banks are more restricted in Europe on how they lend, and there are a lot of alternative lenders who are making hay while the sun shines, as it were, in the market. And there's different costs of capital around that, but generally speaking, there is a lot of people who are funding and financing deals. I don't recognize any argument that says that there is insufficient money or insufficient debt to do deals across Europe. And you're seeing significant activity in the European sector over the last few years that will continue post-COVID. What you are seeing, though, is a discrepancy between the expectation of the seller and the view of the buyer. And that gap is quite large still. So there are people who are saying, I'll sell my asset because I think I need to for whatever reason, or I want to, but it's worth that. And people like me are saying to people who are looking at these assets, actually, I'm telling you, it is only worth that based on a business plan that does that. And that's where the problem lies. So I'm seeing a lot of hotels up for sale that don't sell, and the process stops. And then they might come back in time and revisit it. But there is a real discrepancy between that expectation on price and what people are actually willing to buy. And brokers are having to deal with that continually to make sure that they can try and bridge the gap and bridge that expectation, and hope that they can get a price that actually makes sense. The better assets, we bid on an asset last week for 65 million pounds in Scotland, which is a fantastic asset, and it's very close to guide price. And my view is that the guide price or there or thereabouts will be met. So there's an example where that doesn't happen. The guide price, the expectation is actually what it's worth because I could see and justify those prices. But that's not the typical in my experience, not at the moment.
In the past 3 months, I've been at a couple of conferences in the U.S. and um, it's the same thing. There is a gap between the bid and the ask, and I heard one data point, which I don't know if it's true, but I'm just going to go with it is because I'm hopeful that that would narrow the gap. But he said within the next 6 months, so this is from October, so within I guess by whatever March, um, 1/3 of all hotel debt will be coming due in the U.S. So I don't know if that will mean, but also interest rates might be going down on a downward trend too. So maybe there won't be a need to capitulate. But I just keep waiting to that moment of capitulation because then the capital will be able to flush itself through the system and then things will start working again.
I think that there is going to be a huge need for refinancing these deals or finding a reason or finding another option which might involve an agreed sell. I mean, actually, I've seen that as well over the years. We talked about the position of the lenders and the banks and how they're behaving. You don't see distressed assets where it goes into administration, everyone falls out, the banks seize the assets, the owners wiped out, and so on. That happened for years, and certainly pre-financial crisis. And afterwards, of course, directly after the financial crisis, you saw that a lot. Today, there is a more joined up approach, and the banks effectively saying, we're going to need to put this on the market, and you're going to come with us. We'll try and get you the best price, but we'll do it on an agreed basis. And that you're seeing a lot of as well, which is in a better way of protecting value. If there are difficulties and people know about them, the pricing is much lower. Customers are much more nervous. You won't book your wedding if you think the hotel's in trouble. That sort of thing. So this is a much more sensible environment from a lender's perspective, and I think that's a lot to do again with where they sit in the stack. At sort of the 65% mark compared to where they were exposed so much before.
Yeah, it gives a nice margin of safety. I also wonder, just thinking out loud, in a pandemic or a global financial crisis or any kind of crisis, hospitality, travel, and leisure are usually the first to get hit. And when COVID was happening, I remember reading articles saying that people had created a fund, or there were funds with $1 trillion in capital waiting to just pounce on deals. But it was almost like that was just too easy of a play. So much capital went out there and it just bid up everything, and that it just didn't make sense to do any deals.
Yeah. I mean, look, COVID was an extraordinary period. In my whole career, and I'm sure it's the same with everybody, I've never seen anything like it. And the main reason is that you don't close hotels. You don't close hotels from an operational business. And we closed our hotels 3 times, literally closed the doors at 3 periods through the 18 to 24 months based on government policy, and then reopened them again. And I told you that we are busy when it's good. We are very busy when it's bad. The worst scenario for me and for my company is if there's stagnation, if no one's doing anything. Because if there's no activity, then there's very little opportunity for companies of my profile to be able to get involved in a deal or a situation or an opportunity or an investment or whatever. And during COVID, no one was doing anything. Everyone was sitting on their hands, and the government was paying everyone's salaries, and the banks were told step back, landlords were told to behave, no one did anything, and it was a fake market. I think you talked about it earlier, it wasn't real, and that was continued throughout and beyond, until it started to normalize only in recent years.
But in my opinion, and again, I don't know your business as well as you do, in those kind of intermediary times when it's stagnant, I think that's the beauty of the model that you've built, because you have that management business, you have that other, you always have the cash, you always have the flywheel going, just waiting for the right time. So it might not be as exciting, but I would think that you're generating revenues, right? It might not be the exciting or the most profitable of the revenues, but it keeps the machine, it keeps the ship of state going in the right direction.
We it's If you asked me what my proudest moment was in my career, it was coming out of COVID intact. And I say intact in the loosest possible sense because it was a terribly difficult time. Um, but we lost over an 18-month period 90% of our income overnight. So if you think about it, no one was hiring anyone to advise. There were no investment projects. There was no investors were doing anything. My hotels were closed, so I couldn't take fees out. Um, and whilst we did what we could to look after the hotels, maintain and manage them, the reality was that for a lot of the time, there was no business, there was no industry. And we employ directly about 55 people in the central team. And we oversee thousands, of course, in the hotels and manage them. But I directly employ around 55 people. And in our business, David and I talked right at the beginning of COVID and said, look, this could go on for some time. Um, and our equity is our people. That's all we have. We don't own anything. We are built over the previous 10, 12 years at that point, this amazing platform with amazing people. And we desperately didn't want to lose any of them, but we weren't earning anything to pay them and keep them. So we were lucky enough to have had a good year in 2019, and we kept the cash in the business. We didn't pay ourselves. Everyone took a little bit of a hit across their salaries. Government supported the rest, and we survived. And at the end of it, I lost 3 people. That's all. And I was so proud of that. And to this day, I'm proud of that, because without that, when it got busy again and it all blew in 21, 22 onwards, the market came back. We had a great year. But we wouldn't have been able to had we not maintained the business in the way we had. So it was incredibly difficult, but I was very proud of the result.
I love how you said that the people are your platform, because I'm a partner in a Canadian company called Berman Falk, and over the past 6 years, we've really built this incredible platform of people with a global supply chain and dealing with all the tariffs and the COVID and everything. We really invested so heavily in our people, our values, our culture, our processes. And when I think about where we are in this kind of stagnant renovation cycle world right now, I think about this lake of CapEx and work that's up there, but held behind a dam of tariffs, high cost labor, high interest rates, et cetera, et cetera, et cetera, construction costs. But we built this platform. We are invested and we're committed to this platform because when that dam breaks, we want to be able to execute and delight our customers on as many projects as we can. And I know it's going to break. I just don't know when. So when you think of the future and this platform of people and just the different channels that you've built and invested in, what excites you most about what you see in the future?
Let me answer it in this way. I've seen a revolution in the hotel industry in terms of the way it's run and operated and structured over my career. As I said, when I arrived in the industry in 1989, and for the following 15, 20 years, you saw hotel operators who owned all their own hotels, and the brands were the full whack. They did everything. And there was really no investment community beyond that. There were just people who supported the big hotel companies. Then people like David Michels at Hilton and his opposite numbers sold all their assets, divested of their investments, of their assets, and transferred from being an owner operator to being a brand company. And the brand started to proliferate through management and through franchise. And it started in the States. where you were way ahead of us, and Blackstone bought Hilton specifically as one of the last, I think it was the last deal before the financial crisis, in order to roll this model across the world. And all the others did it too. So I've seen this revolution. And what it did was create an entirely new group of customers for the brands, for the hotel companies, and created companies like mine with white label management, which were there to run franchise businesses, and an investment community that wanted to invest in the hotels and the sector, but didn't actually understand the operation and the sector in the way that they would need to, and perhaps did more so in pure real estate and other parts of the industry. So we were able to go to this market and say, I can help you. I know you'd like to be in the industry. I know you see the returns that can come from it. But if you don't take advice and get the right people next to you, you can lose your money as easily as you make it. And so the answer to your question, what excites me, is that that education and that opportunity is now been in the industry for a while. And I see a group of a whole area of clients who really love our sector, who really can see the returns that they can get from the hotels, and who are willing and recognize the importance of working with proper, trained, experienced, high-level professional hoteliers to be able to realize the value that they're looking to get. And it's that realization that they need that support, and that companies like mine and others who are also, I'm very good and I'm very established, bolting onto this investment model in order to develop the hotels. It makes everyone more nimble. The growth in the industry has been significant. And importantly, customers remain in a place, end users who love and always will love hotels. We all love hotels. We love staying in them. Even on a business trip, the only time you're not a businessman is when you're in a bedroom. So you are in a world where the customer is looking for great service, great standards, and great and are willing to pay the much higher costs now in order to receive that service. And there is a group of investors who are willing to come in and invest, and we're kind of right in the middle of it all. That's what excites me.
And then if there were investors out there looking to get into the hospitality sector in the EU and UK specifically, where should they be looking? Where are you seeing the bright spots as far as whether geography or market segment? And what's the best way to, in your opinion, to be able to get involved in those types of deals?
I'll tell them to give me a call.
Will do.
And yeah, thank you for that. And then you can furnish the places for me.
Perfect.
So, the answer to your question is that there are a number of opportunities. I think we need to recognize that the cost base of the business is unsustainable today, and that moving forward, we need to find models that reduce the costs. And that can be done through technology. I think AI is going to have a huge impact on the industry, along with every other industry. And I think that will allow costs to be saved in a whole load of areas. Another major conversation to be had there. You have the existing brands already invested in limited service products. In Hilton, that would be Hampton. In IHG, that would be Express by Holiday Inn. In Marriott, you have Courtyard and everything in between. That everyone has these limited service products, which are really good hotels. We run the largest Hampton in Europe, in London, and it's a fantastic operating business with a low cost base and a very high room count. Those businesses work really well in this environment, and I think moving forward, you are looking to find ways of going into markets which are sustainable and can develop and drive profit. There is another area which we love, which is complexity. We like complex situations. So you take a hotel that's traditionally done X. And to your point about the banks looking at these businesses and the refinancing needs, a lot of these hotels are it's coming to the market today, having done something that perhaps isn't right for them anymore. They've got the wrong brand on the door, or they haven't got a brand at all. They've got the wrong positioning. They haven't invested in the right place. They don't have the right customers, the right profile, the right distribution, the right sales and marketing, the right control on their cost base. Their food cost is out of control. All these sorts of things. We have a large number of moving parts to the success of the hotel. And I think that there is opportunity, and this is what everyone is looking for, of course, where you can see the moving parts and you know that if you take that one, that one, that one, and that one, and you improve them and redo them in a particular way, it's going to become a different type of asset. That's much more difficult to do in real estate. An office is an office. And in a real estate is real estate. In a hotel, there are so many moving parts. You get one that's broken or partly broken, and you bring people like me and others into the business, and you get an investor who says, okay, I can see that business plan. And I know if I take it and move it to there with these partners and you in the middle of it, I'm going to make more money with exactly the same building. That to me is where the opportunity lies.
It is amazing how, in the stories that you shared of where Hilton or all the brands used to own their own assets, and then they spun them out, they became brand and management, and then owned asset REITs, whatever, and then the management kind of spun out and got more specific, and the brand stayed there. So the capital became more efficient and good at what the capital does in those segments and specialized. It is amazing to me how certain hotels that are quote complex, they have the opportunity to have so many channels of revenue, from restaurants to outdoor activities to just not just the rooms, but I don't know, you can lease out retail, you can do there's so many different opportunities, spa, wellness. But when you go to a bank, from what I understand, the bank almost discounts all that other stuff that really can turn a profit, and you could lead with F&B, but oftentimes the banks will really super heavy weight the room revenue and discount all of that other stuff. So it is interesting to see you wanting to get so involved in the complexity, because those are just like, they're just more difficult. But when they're done right, if a hotel is modeled to have 10% come of their revenue come from F&B, but there are instances a lot in the luxury lifestyle and independent space where the F&B can contribute 60, 50, 60, 70% towards the total revenue of a property. That's crazy to me. And it's also weird that the valuation might not account for that when you're going out to market.
Right, it's a really fair point, and there are revenue streams that you're nervous about more so than others, and banks will look at that. I think it's to do with the reliability of the business plan and convincing people around the project, around the hotel, that this is real. You can now benchmark almost anything. We have data for every location across Europe, live data as of, I can tell you in this sector, in this city, in this part of Europe, what it has delivered in the last month, and where the rates are, where the occupancy level is, what the RevPAR is, and also how it converts down to profit. So we know a lot about what's going on in the industry today, and we can demonstrate if you did this, this worked. It worked with these sorts of numbers. We're going to do the same thing, and we're going to take and show you the evidence which says that the market is already doing that. But this hotel is running here. And it's running here because of the difference in the product or distribution or whatever else, management. And I'm going to fix all that. So you can be reassured that it's going to go to there. And that might be F&B, it might be spa, it might be rooms. So I think that there's a lot to say about the reliability of the business plan, the credibility of the people that deliver and are talking about the business plan. Banks want to work with people they trust. And if they believe that you're involved, it helps. And that's one of the things we offer to our investing community all the time. We know this bank, we know that operator, we've done this, this, and this. Use my name, use the brand, use the team, tell everyone that you're working with us, and that adds some value, as it does to many other hotel companies and advisors of our type. And I think that the banks are much more comfortable when it comes in that way.
Being an expert always helps. Last question. You studied marketing at Penn State University, Nittany Lions.
I did.
I'm not a big fan, but I'll give you credit. If the Hugh that I'm speaking to right now were to magically appear in State College, Pennsylvania, and in front of your younger self at Penn State, what advice does the Hugh I'm speaking to now have for the younger Hugh?
Lose the arrogance. It's very interesting. I did an MSc, an MS in America, a Master of Science degree in marketing. I love it that marketing was seen as a science. In Europe, it's an MBA, but it was the equivalent. And I was studying marketing in Britain, and then I went to America, and I was taught by the guys that wrote the books I was studying in England. Um, you guys are fantastic in this subject. So it was a privilege to be at Penn State, even where we had a losing year for the first season in 50 years when I turned up. But I loved it, and I had a great time. And I remember I was studying all these Harvard Business School case studies, and I was sorting out IBM. I was sorting out these huge companies through the classroom, and I came out and I thought I knew everything. I was the absolute bee's knees. And I went in to the industry with all these qualifications, and I was confident because I always have been. And the truth is, I knew that amount about the world. And I wish, in hindsight, although that did me a lot of good in working upwards, the chairman and chief executives of the companies like me because I sort of had all that expertise at a young age, but I didn't know how to put it into practice.
And confidence, probably. Yeah.
And confidence, but I wasn't great as a manager. My people in my team have been with me for many, many years. I'm a much better manager today than I ever was when I was younger, and I've managed thousands of people over the years, and love doing that. But I wasn't very good when I left Penn State. I was naive and arrogant and overconfident and thought I knew more than I did. So I think I would say to myself, go easy. Know you know very little. Use what you've got, and be a little more humble. I think my wife probably would recognize that as well after 30 years of marriage.
30 years. Congratulations. I just had my 22nd. Well, I just want to say this has been really illuminating for me. It's so wonderful to have gotten to know you and hear your stories, and I can't wait to grow our relationship moving forward. If people wanted to learn more about Michels and Taylor, or you in particular, what's a good way for them to connect or reach out or learn more?
Well, we have a website, Michels and Taylor, online, that has all the details, everything they need to know. And we're a very, very open business. I like to get calls directly from anybody at any time who want to talk. We have very flat structure, but call us or email us or go through the website. And I'd love to talk to them and see how we might be able to help them.
Thank you. And seriously, thank you, Hugh. It's an honor to speak to my first OBE.
Well, bless you for mentioning it, and thank you. It's been great fun. Thank you for thinking of me.
And thank you to all of our listeners. Without you, we wouldn't be crossing the pond and having these incredible conversations. I want to do more conversations in the EU and in Asia as our footprint grows globally. it's just exciting. So, and also if this changed your idea of hospitality or doing business, or someone that could do business or would think about doing business a little bit differently in via geography or how they organize their business, um, in that horizontal and vertical way that he has, please pass this along to them. We grow a lot by word of mouth and just forwards of emails, or forwards of links. So, and don't forget to like and subscribe. I appreciate you very much, and we'll catch you